These things are big deal. This is something that you have to put, in my opinion, as your top priority when it comes to financing your business. You don't want to be that over-optimistic guy or woman or person in this particular case, because this is the one area where you want to practice being conservative. Welcome back to Hey Charles. Today, we're going to ask this question. Are you making 3 financial mistakes that may potentially sabotage your business? Let's get into it. Let's talk about the 3 things that I find that are very common mistakes that may cause issues when you're running your business. The first one is going to be the over-optimistic budget. So it's human nature to always expect the best case scenario. So when people budget, they budget in that manner where everything is just way too good. They make the numbers fit to how they want them to fit so they get their outcomes. That's not a very good recipe for a budget. And quite frankly, you can get yourself in trouble. And believe it or not, studies actually show that most businesses underestimate their budget anywhere from 20 to 40%. That's a big number. 20 and 40% is huge when it comes to a budget and projected expenses. So one of the things that you have to really think about is that if you just examine businesses that have failed, 82% of them had this exact issue, that they under budgeted, they weren't realistic, they had numbers that they thought were going to happen as far as expense, and it turned out to be a whole different story. And by the time they realized that, they were upside down, and eventually those businesses went under. And it's not an uncommon mistake, especially when you're starting out, but I actually see it in people that have been in business for a while, especially if they're going to do a project or an expansion, or maybe they're building a building, or they're doing whatever it is. They want to do a big rollout, and they start budgeting and saying, oh, it's going to cost this much money. And then pretty soon they find themselves in the process, in the project, just going, man, this is way more expensive than we thought it was. And it's because they weren't realistic about what the budget was supposed to be. And these things are big deal. This is something that you have to put, in my opinion, as your top priority when it comes to financing your business. You don't want to be that over-optimistic guy or woman or person in this particular case, because this is the one area where you want to practice being conservative. Just be conservative, be realistic, do your homework, look at your categories. Some of the things that I've done is I have brought in professionals to overlook a budget, just to maybe take a second look, another set of eyes. And man, there's been so many times they're like, Charles, I think you're really underestimating here. I don't think that's realistic. And really there's no cushion. And quite frankly, this isn't really going to make sense. So that's okay. That's why you hire professionals to do that very thing, because it's better to spend a little bit of money up front than be way upside down trying to figure out a way out, right? So that's one area that a lot of people really need to pay attention to, especially when it comes to budgeting. And if it's like, well, I don't know, like if I want to hire a professional, well, if you do your homework and, you add a cushion of 20%, I mean, I'm not saying that's the exact formula to use, but it's better than putting the bare minimum. And I think you're going to be much more successful if you at least add yourself some cushion, over and above what you think that budget is going to be. If you don't want to hire a professional, there's software out there. There's software that's being developed every single day. It's solid. It'll help you walk through the budget categories, maybe give yourself some analysis to really understand whether or not that you're on track. So these are some things that are very simple to do. And also, if you've been doing it for a while, make sure you're keeping track, of your yearly expenses year after year. So you can do a 3-year look back. Not just a 1-year look back or a 3-month, but actually do it for 3 years. Just see the money that you're spending and then try to average it out and then give yourself some buffer. The second thing is having no contingency whatsoever for unexpected expenses. And they do come up. It happens. I'll tell you where it really comes up, especially with the customers that we have, is maybe they get an unexpected renewal in their insurance premium, and it's way higher than they thought it was going to be. And that happens. And it's something that they didn't even know was coming. They just thought, oh, well, it's going to be this amount, and it turns out to be that amount. Well, that can throw you way upside down in a hurry, because you've essentially, if you're doing it properly, budgeted, and hopefully you have some pad there, but ultimately you didn't budget that much, and it was something that you didn't see coming. And that's one example. There's other examples. You might have an unexpected bill, or maybe where you buy your supplies from or one of your vendors, maybe their pricing went up as well for something that is totally outside of their control. Maybe it's something to do with just market conditions. And we've all seen this, especially recently, on how things can cost a lot more than expected, because of supply and demand. So it's always a good rule of thumb to get yourself a contingency fund. Don't touch it, put it in place, build that over the years. That's for those times when you get a curveball thrown at you, so you are able to address that immediately and not have to worry about, how you're going to come up with this money or what you're going to need to do to solve this shortfall problem. The other thing that you can do is also put a credit line in place. Credit lines can be used for different things, but you can have a credit line for contingency in that event that something happens, because the last thing that you want to have happen is that you can't function your business or operate your business because you're upside down and you don't have any cash because you had to spend it all on this expense. And I'll just put it this way. It's probably one of the worst feelings to have that happen, but it's a much better feeling when you know that you have a contingency or some runway to be able to solve that problem. Because sometimes you may not have a long time to figure it out, but if you do have a contingency fund available to you, then you can utilize that, buy yourself some time, or if you've really done it properly, just be able to address that expense and move on and then rebuild the fund. The last one that I really want to talk about is treating your business like a piggy bank, like your personal piggy bank. And what I mean by that is, really kind of looking at your business as another source, like another bank account that you have personally. So, let me give you an example. It's not uncommon, especially with, small and mid-sized businesses. But, if you have a lot of cash in the bank and you see something that you need, or you want to make an expenditure in your personal life, it's not uncommon where you might say, oh, well, there's plenty of money in the business, and, I'll take a distribution and I'll take some profit, and maybe I'll do this because I really need this thing. I've seen this happen a lot. And actually, quite frankly, we've all done it in small and medium-sized businesses. I've done it. I've seen it happen. And what it ends up doing is really just not giving your business the ability to operate like a business. Because if you want it to be able to grow and you want it to be able to function, you need to treat it like a business. So the solve is really pay yourself a fixed salary for the year. Create a structure that for distribution of profits, whether it's at the end of the year, make sure all of your expenditures, are paid for, you got leftover profit. But if you're taking that money early, or you're using it for other things, you're really putting yourself at a disadvantage and hindering your growth potential. Also, if you're not keeping things separate, it makes it really complicated to really get a true understanding of how profitable your business is. And this is a big deal, especially if you're looking to expand, or if you want to roll something out new and you want to understand how much it's going to cost and how much your business makes. Or if you're going to a financial institution to get a line of credit, or maybe you need a loan, you always want to make sure that what's in the business is in the business, not in your personal account or vice versa. And you just want to keep everything separate and have a structure to give you that ability to pay your bills with your fixed salary or draw, however you want to structure that, and then how the company profits get distributed. And when. That will give you a formula to success, especially if you want to grow your business. So these are some tips that I highly recommend that you pay attention to. These are just simple things that you can do that will give yourself more financial intelligence into your business, give you the ability to have a greater level of success, especially just not only in the day-to-day operations, but in your profit. And when you want to take your business to the next level, you want to be able to do that. And you don't want to have you have enough obstacles as it is. Don't let this bad financial management practices, right? Just bad habits become a part of your daily operations or the way that you run your business, because you want to set yourself up for success. And a good way to do that is really get your house in order financially and make sure that you put some guide rails and some rules in place and follow them and ultimately be disciplined. If you find this episode helpful, share it and subscribe. You can find us on YouTube at HeyCharlesBiz and on Instagram and TikTok at HeyCharles77. See you next time.